After a long wait of 20 years, the much-awaited public offering by the Tata Group is finally here. In this episode, we will discuss all about Tata Technologies. We will first give you the essential IPO details. We will talk about the business model of Tata and the market it operates in. We will discuss the financials and the positioning of Tata Technologies compared to its peers. We will also look at the valuations. And lastly, which is something you must definitely watch, are the key risks and strengths of Tata Technologies. So stay tuned till the end. The Tata Group is launching the IPO of Tata Technologies on November 22nd, 2023. The bidding will remain open till November 24th, 2023, and thus the IPO will open on Wednesday this week and it will remain open till Friday. The Tata Group has fixed the Tata Technologies IPO at a lower band of Rs 475 to an upper band of Rs 500 per share. Now, it is entirely an offer for sale by the promoter Tata Motors and investors Alpha TC Holdings and Tata Capital Growth Fund. Hence, the company will not get any money from the public issue. Also, the IPO includes a reserved 10% quota for Tata Motors shareholders. Now that we've spoken about the IPO details, let's talk about what exactly Tata Technology does. Tata Technologies specializes in something called ER&D, which stands for Engineering, Research and Development, with a deep focus in the automotive sector and also presents in aerospace and industrials. Now, basically, they're the go-to guys for providing product development and digital solutions to global original equipment manufacturers. They either handle the entire process from start to finish or assist at different stages in the product development cycle. The company also offers end-to-end development of electric vehicles. Now, to understand what I said better, let's look at a couple of projects Tata Technologies has worked on. Now, Tata Motors hired Tata Technologies to transform the regular, traditional cars into electric vehicles. Tata Tech was involved in tasks like designing, packaging and integrating components such as the battery, motor, charging socket and electronics into the existing cars. Tata Technologies then successfully completed and launched two IC to EV conversion vehicles, Tata Tigor EV and Tata Tiago EV. And these have a strong foothold in the current EV market in India. Now, another example, Tata Tech partnered with a global company to convert a passenger airplane into freighter, allowing it to transport cargo instead of passengers. Now, in a nutshell, Tata Technologies is a company that's like a tech expert for other manufacturing companies. It collaborates with manufacturing firms to turn their concepts into reality. Tata Technology primarily categorizes the line of business as follows: services and technology solutions. Services is the primary business line, which includes providing outsourced engineering services and digital transformation services. Now, this sector contributes to about 79% of its revenues. It also has a deep presence in the auto sector, and it largely services Tata Motors, Jaguar Land Rover, and the wider Tata Group. Now, within the services sector, automotive is its largest industry vertical with about 88% of its service revenues. Now, the company also complements their service offerings with its product and education business, collectively known as Technology Solutions, which contributes about 21.4% of the total revenues. Now that we've spoken about what the company does and the segment it operates in, let's talk about the market Tata Tech operates in, which is the ER&D market. Now, as we mentioned, ER&D market is all about designing and developing new products, processes and technologies, helping businesses create innovative and competitive products. Now, the global ER&D spend for 2022 was approximately $1.81 trillion and is expected to grow at a CAGR of 10% by 2026. Now, the ER&D spend outsourced to third-party service providers such as Tata Tech is expected to grow at 11 to 13% CAGR by 2026. Now, do know that global ER&D spending being outsourced is just 5.5% of the total ER&D, which means there is more headroom for it to grow. Now, notably, India is also a global leader in the engineering, research and development space. In the last 4 years, the outsourced market of Indian service providers grew at a CAGR of approximately 14 to 16%, which is more than twice the growth rate of the Western European service providers. Now, because Tata Tech has a deep presence in the auto sector, let's talk about some major growth drivers that will fuel the growth of ER&D spend in auto sector. Now, number one is electrification, which is nothing but EVs. We all know the growing need to meet carbon emission targets and to move to a greener future. With this, the adoption of EVs is anticipated to take center stage in the automotive industry. Now, automotive players are also looking to provide autonomous driving, which is the key capability to operate without human intervention. Lastly, they're also looking to create connected vehicles. Connected vehicles are equipped with internet connectivity and communication technologies. These vehicles can have features like GPS navigation, real-time traffic updates, vehicle-to-vehicle communication, roadside assistance, etc. Now, with these trends in place, the global automotive ER&D spend currently stands at $180 billion, making it the largest contributor within the manufacturing sector, constituting roughly 10% of the overall ER&D spend. And the digital engineering spend is expected to grow at a 16% CAGR by 2026. Now, we see that opportunity is ample for players like Tata Technology in the ER&D space. Now, due to these mega trends we discussed, auto manufacturers will always be on the lookout for tech experts like Tata Tech to stay ahead of the curve and to create innovative products. Now, this creates a massive opportunity for companies like Tata Technology to capitalize on these trends and be at the forefront of engineering the next generation of connected, autonomous, and electric vehicles. Now, in the growing market, Tata Technology competes with KPIT Technologies, Tata Elxsi and L&T Technology Services. Now, because Tata Technologies and Tata Elxsi belong to the same Tata group, let's understand how these two companies are different. Now, Tata Elxsi and Tata Technologies are both subsidiaries of Tata Group. While their services overlap, they operate in different sectors. While Tata Elxsi has a presence in auto sector, it is also present in the broadcast, communication and healthcare. From the latter two, it gets a huge chunk of its revenues. But Tata Technologies is a pure play ER&D company that focuses on the auto sector. Now, coming to financials. Revenue growth in fiscal year 21 was hit on the back of an overall slowdown in the automotive segment due to COVID-19. But the growth bounced back in fiscal year 22, growing about 48.3% compared with fiscal year 21 and about 25.1% in fiscal year 23 compared to fiscal year 22. Now, among its peers, L&T Technologies is the biggest player with the highest revenues, followed by Tata Tech. But when we look at the growth, CAGR growth for over the last 3 years was highest for Tata Technologies, followed by others. Now, coming to profitability, PAT growth on a 3-year CAGR basis is the highest for KPIT Tech and Tata Tech, led by Tata Elxsi and L&T. Now, geography concentration is another parameter to see the extent to which these companies operate in multiple geographic regions or countries. Now, companies with a more diversified global footprint may be less vulnerable to changes in a single market or region. So, when we look at Tata Technologies' geography diversification, it is much more diversified than its peers, with 19% coming from North America, 27% in Europe, and a substantial 35% from India, and about 18.7% from the rest of the world. However, when it comes to client concentration, Tata Technologies has the maximum exposure to the top 5 clients compared with other peers such as Tata Elxsi and L&T. Now, usually when the client concentration is high, and if any of these top 5 clients suffer deterioration, it can likely impact Tata Tech's business. Now, another important indicator is return ratios. Tata Technologies' return on equity underwent a positive transition from 11% in fiscal year 21 to about 21% in fiscal year 23. Similarly, the ROCE showcased an upward trajectory, moving from 14% to 24% in fiscal year 23. Now, let's look at the price to earnings ratio, which is just how much investors are willing to pay for each rupee of earnings. At an upper price band of rupees 500 and based on fiscal year 23 earnings, the issue is available at a PE of 32.5 times. At the same time, its peers mentioned by the company in the draft papers, Tata Elxsi is trading at over 60 times, KPIT is also at about 80 times, and the industry average is around 60. Now that we've discussed the business model and the market and the financials, let's come to the key strengths and risks. Tata Technologies has deep expertise in the automotive industry. The rising need for next-gen technology, especially in the automotive segment, should drive growth. The company is also emphasizing on non-automotive sector to develop a roadmap to reduce its exposure to one industry. Now, it has also delivered healthy growth in earnings, with profit rising more than 60% and revenue increasing more than 30% in the years fiscal year 21 to fiscal year 23. Tata Tech's clients include some of the most notable names such as Airbus, McLaren, Honda, Ford, etc. Tata Tech also benefits greatly from being part of the Tata Group, especially securing long-term contracts with Tata and JLR brands. Now, coming to key risk. As is an offer for sale, IPO proceeds will entirely be transferred to the selling shareholders, and the company will personally draw no benefit from this. The revenues are also highly dependent on client concentrated in the automotive segment. An economic slowdown slowdown or factors affecting this segment may have an impact on the company's operations. The company also has a high client concentration. The top 5 clients contribute about 71% to its revenues. Now, a slowdown in revenues from these customers may weigh on its performance. However, the company is also focusing on reducing its concentration in expanding to other OEMs and tier 1 players, and also expanding to other sectors such as aerospace, industrial, which is a positive. Now, this was our analysis of Tata Technologies, but do know that this video is just for informational purposes and does not constitute financial advice. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com